Well, you too, right there in God's Country off of the Joshua Tree. Oh, I love that album because it's named perfectly. This is Josh with K4CO Radio. Happy Monday, everybody. Hope you're doing well. We are down here. We got Sarah, our vice president. Sorry, I said the word got.
Oh, that's okay.
For everybody out there, you should test this because she said this to me. The word got should never be used in your mind, right?
Well, happy Monday, everyone. And it's wonderful to be with you. Yes, to that point. So it is kind of my Achilles heel, if you will.
Right.
My mom was an English teacher for decades. And so I think in many circumstances, it's used incorrectly on very social platforms.
Right.
You know, through even our schools, like, we got to go do something and here's what I got. And, you know, it's,
Or if you got milk.
Yeah, so, but it's fine. I didn't even catch it.
Fair enough.
So, well, happy Monday, everyone.
Happy Monday. It's
Thanks.
beautiful weather. And it's not 90s. That's all we love. So, and we have a guest. We haven't seen you in a little while. So it's really nice having you back. Sarah, who do we have?
I know. This is wonderful. I know we were just reminiscing. We're like, we haven't had you in for a while. And so much is changing in the mortgage industry, in the world, and today. So, again, we have Michelle Oddo in. And for those of you that want to check us out on social media, please go to Facebook, Instagram, LinkedIn, YouTube. And please, if you have questions, feel free to put them in the social media chat. That's why we're here. We love answering questions on the fly, especially with our experts. So if you have your computer in front of you, you can go to oddogroup.com. That is ODDO group.com. We have Michelle Oddo, who's a senior loan officer and one of the owners of the Oddo Group. And I'm going to give you her call her cell phone, call or text her call number is what I was going to say.
Oh, wow.
Oh, the brain needs to function on a Monday. Her cell phone number is 303-961-6906. Hi, Michelle.
Hello. Happy to be here. I have missed you guys.
We've missed you
Glad
too.
to be back.
You know,
You just got back from a little trip, didn't you?
Well, I went to Florida. Some high school girlfriends and myself. We rented a house in Delray. So I grew up in Florida. That's where I graduated. And a lot of my friends still live down there. So we rented a house and did a girls' trip. So that was fun.
Nice. Well, thank you for talking to me even on your trip. I texted you. I was
course.
like, can we chat? And you're like, I'm in Florida. I'm like, well, don't talk to me.
Oh, I was talking to everybody. That's kind of how it goes.
No, I know it. I have my
Yeah.
laptop on
Yeah.
my lap through vacation time. So
Yeah.
I totally get
Yeah.
it. Well, thank you for coming in, of
Yeah.
course. Well, I mean, there's a lot going on, and I love the tearjerker stories, and we'll get to those. Sounds like you've had some emotional closings and another one coming up. That's why I adore you and Tim. Like what you all do for the community. It's not just a job for you all. It truly is this lifestyle and helping people. So what's new in the Oddo Group, and because we're nearing the end of summer and into fall, and it's an interesting market, especially for more, well, both sides, of course. So go into a little bit of the detail of the market, if you would.
Yeah, the market is a little crazy. It's pretty hyper local in terms of like every area has its own unique situation going on. There's certain areas, and I'm licensed in all states, so I see, all across the country, there are certain areas like the Northeast. Their market's on fire. If a house goes for sale, it's gone. I mean, like where my cousin lives in New Jersey, they have like 5 houses for sale in the entire, city, town. So there are certain areas where the market's really, really hot. Colorado, as an example, we have certain areas in Colorado that they're always going to be competitive. Cherry Creek and Hilltop and Crestmore and parts of the Highlands. And there's just certain areas that just seem to always, Congress Park, and they just always command a price, and they stay competitive. And then we have other areas that are a little bit softer markets, maybe Parker, Castle Rock, parts of, a lot of areas where there's a lot of building going on, new construction. It makes it harder for resale because that new construction lasts a long time. In some of these areas, they'll be there probably another 5 to 10 years. And they are offering huge incentives, which of course they build into the price. they're controlling the entire neighborhood. So all of those homes are being priced by that same builder. So the comps are their own. So a lot of times they build these huge incentives, like a big price concession to help them buy the rate down. So if you're trying to resale and sell your home, it makes it hard to compete with that, right? So anyway, all that to say, we're still busy. The market is good. How competitive the area is dependent on the area. And a lot of homes, if they're priced right and they are in great condition, if they're ready, move-in ready, they are moving fast and still going over asking. And then you have other homes that are priced too high, they're going out too high, and they're not move-in ready, they need work, and they sit. And then those homes, they end up chasing the market. They go out a little bit high, and they're like, well, let's just see what happens. And then what happens is what you can guess would happen, nothing. And they don't get any showings, or they don't get an off, and then they have to bring it down a little bit. And at that point, the market, now they're just chasing the market.
Right.
And when a home sits too long, people start to wonder what's wrong with it. So you get a lot of that. So all that, to say, but I'm still really busy. I was just telling you on the way in, when I got here today, Josh, I'm really busy, and we have a lot of deals going, and that's exciting.
Yes. I had a question back to what you were just saying. So for those that are looking to sell, is it better to price it originally, the first time, a little under than what you think to hopefully sell it quicker than to come in kind of more aggressively with a higher price and then chase the market? To your point, it's sitting for 40, 60, 80 days. People start thinking, right, there's something wrong. So what would be a strategy with that if it really is ready to sell and not big issues like no foundation, roof, etc.?
Right. I mean, obviously, I'm not a realtor, I'm a lender. So for me, what I see is the ramifications of when they're not priced right. And I talk with agents all the time. And, most realtors will close, I don't even know what the statistics are. Let's say they do 10 in a year. Maybe they do 20. Some are very busy and do more. But as a lender, we're doing 15, 20 loans a month. So we're seeing a lot of reps, right? And so for me, I do see when it's right and when it's not right. And what we see for the most part is that when the home is priced, it doesn't have to be way below what the market's doing. But if it's priced right, let's just say the average home in that neighborhood is selling at $750. And some sold at $800 5 months ago, 6 months ago. But right now we're seeing everything kind of around $750. If a person's like, well, we're going to go out at like $775 and see what happens, or $800, or, those homes will usually sit. Whereas if they come in right at that market, or maybe just below, like you said, maybe $745, or, just priced just sharp, just right, you will a lot of times end up over, because then you have multiple offers, and that's where your prices get kind of, beefed up a little bit. So it's always better to go at or just a little bit below versus trying to go up over and go, oh, well, we can always drop it. That definitely is not a great strategy.
Okay. And you have this finesse with people, and you can be very creative and things. I mean, right when you walked in, I'd never even heard of that. So I want to unpack that here in a minute. But talk about the different ways to be creative. Like you don't have to have a certain credit score, or you don't have to put a certain amount down.
Well, and before you go into that, we had a wonderful interview earlier today. I didn't know if you knew, J-Dog Hauling, and he used you, the Oddo group. And so it was at the end of the interview, and I was just saying, oh yeah, at 5:30 we're gonna have Michelle Oddo, and he was like, oh really? No kidding. It's Jimmy Hamilton, who with J-Dog.
Yeah, I know Jimmy Hamilton.
And he said she is absolutely just wonderful, and we talked about being a business owner, especially a new business owner. You don't, as a new business owner, for the most part, a lot of business owners, they don't take an income because it all goes through the business, and there's no way to get approved for a loan. Right. When you show no income.
Pretty difficult.
But there's different ways you can do it, and that's kind of
awesome. I'm so happy that he was here and had good things to say, which most of my clients stay in contact. I mean, we try to stay in contact with all of our clients. You know that, Sarah. And I do a lot of things to make that happen. But I have people from 10, 15 years ago, 5 years ago, and they always They'll reach out at random times, and I just love that. So it's fun to hear names of loans I've closed. Okay, creative ideas. So self-employed people, yes, tax returns can be an issue. Accountants want to be creative, and that's a good thing. And we want to pay the least amount of taxes as possible without going to jail.
Still be legal.
Yes.
On board.
But with that, there are so many loopholes and ways to do that. But what happens is for the lender, when we go to use your tax returns to qualify, we're looking at that net income, right? Adjusted gross income.
Right.
Some of the write-offs we can add back, like depreciation and depletion, some of the mileage, but most things cannot be added back. They're hard costs. And so it's challenging for self-employed people. Sometimes there's a myth that, gosh, I can't even get a loan. So yes, if your tax returns are strong, it's easy. That's just normal Fannie Mae, Freddie Mac.
That's just day to day, exactly.
Yeah. But for the majority of self-employed people, the challenge is what you stated. And so we have other options, things like we can use bank statements where we average either 12 or 24 months bank statements. Can either be personal or business depending on the program. And we would average the deposits coming in. And then depending on the type of business, we would apply a certain sort of a certain percentage of an expense ratio. Could be 90%, could be 90% income, 10% expenses, 50%. Just depends on the business. And but all that to say, most people's deposits into the bank from the business, those deposits, when you average them, even, if you were doing, let's say, a 30% expense ratio, that income is so much higher than what you would get on the tax returns. So that's a great option. We also have options where we can use, it's really great for realtors, we can use their 1099 and not the tax return. That's a great program. We have a DSCR program for investors. So just a lot of different options for self-employed people to help them get into homes. And then you had mentioned credit score, Sarah. So I recently had a client. Sometimes we have low credit scores, and we do an optimization where I can go in and figure out how to help them get their score up, hold their hand, walk them through that, and how high does it need to be? We don't need to be the highest. If you just want to buy a home, maybe we need to get you to 580 or 620, do an FHA loan, and then get you into the house, and then in a year or so we can refinance. So just different options for people. I recently had a client, they're getting ready to close, it'll be next week, and they're going to be married and have a new home. Like, they're getting married and they're in the home. Everything's all new and fun, and they're actually friends of mine. And he's a great guy, but he didn't have a credit score because he was using, the whole Dave Ramsey, you don't really need credit, cash for everything.
Right.
Which is great until you want to buy a home.
Exactly. Exactly. It's actually very financially responsible.
Yeah.
Like myself personally, I haven't had a credit card in over a decade, and because if I can't spend it, then I don't need
Can't
it.
afford it, I'm not going to charge it.
Exactly.
Yeah.
So there is the Dave Ramsey thing, which is very good to use, but then on the flip side,
I have the opposite problem.
you have too many credit cards.
We could just blend you two together. We'd have the perfect credit mix. Yeah, but credit, the thing about credit cards, there's a couple things people don't realize. Keeping it open and just charging a little bit, like gas or groceries, paying it down to $50, $20 every month, that is much better for your score than to either A, not use it, or even worse, close it. Because when you close your card, you lose the entire history. You lose the whole history. So if you have had a card for 20 years, like that credit card you got when you were in college, and you've paid good on it, and you decide to I'm going to close all these cards. I'm tired of having debt. I'm going to pay everything off and close it. Okay, pay it all off. That's great. Don't close it. Or don't close everything. Because once you close it, you lose your history. So that's what this client did. Again, he's a friend of mine, great guy, but he had decided, he was going to close everything. And then, because I actually pre-approved him over a year ago, he was thinking about buying land and building, and instead he decided to, then he got engaged and they're going to buy together and all this stuff. So came back and I was like, what happened to your credit score? He goes, oh, I closed out my credit. Isn't that great? No,
it's not.
no, this is not good. So I had to have him go reopen a card. We waited 30 days. His score came right back, which was great. They found a house that quick. We got him under contract, and they're closing next week. So super exciting.
So a lot of times it could even just take a couple of months of like
Yeah.
a new credit card
Yeah.
to get that going.
Yeah, and if you don't have a prior history, like if you have no credit history at all, a lot of the banks will do a secured card.
Yep.
So you can put like $500 into a savings account with them, and they'll issue a card against those funds.
Right.
And then it takes a couple months, but you have to use it. It's like, do gas, do groceries, pay it down, don't charge it up.
Right.
Because then that's the new problem.
Thank you for looking at me.
Yes, well,
working
just
on it.
happen to be looking that way. I don't know if yours are. But yeah, ideally, like 30% of the limit in balance is optimal. 30% or less. 50%'s okay, and once you start getting up over that, it starts to affect your score. I'll see people who have high balances and still have good credit scores because they pay them down a lot. But the problem with credit is it's a snapshot in time. So if I pull your credit today, whatever was last reported by the bureau, by the creditors, because they
That's
only
what you'll see.
report
Right.
once a month, so maybe they report on the 5th, and one of your other cards reports on the 10th and the other on the 3rd. Whatever date they reported is the date of the balance that we're going to see, and it's only updated once a month. So if everything has a high balance, but you pay everything off monthly, it just may not be showing up that way.
Okay.
And we could just have you pay them down and get me an updated balance, an online transaction history, updated balance, and then we can rescore and get your credit score up based on that lower balance. So lots of things we could do. We do credit optimization to help people with their credit. A lot of times business owners, that's another thing with business owners, they use their cards for their business, and they might have high balances on an Amex and a couple different cards, but we can have them, I can look at it and say, okay, if you can pay these 3 down to this will be your score. Have them
Right.
do it, get me the updated balances, and then we can do an optimization.
Cool.
Yeah.
And I want to throw out there another, because I remember being in the financial field. I heard a lot of people coming in when it comes to credit cards. And we do some credit counseling with
Yes.
some people. And people were under the impression that it is better to carry a balance on a credit card. Myth or fact on that?
It's good to carry a small balance. Like I say, pay it off or charge, pay it way down, pay it to like $20. And the reason if you don't have a lot of credit, if you have a lot of credit and you have other credit, and you don't really need to do that. But if you don't have much credit and you're a really limited credit user and you don't use your cards at all, you probably won't have a score if you're not using them at all. Like you said.
At all, exactly.
Yeah, so I say keep a little balance. A lot of times when we do the optimization, it'll say pay it down to this versus 0. And then I'll say, well, what if it were 0 and it actually is worse for the score? So it's kind of dependent on their credit mix.
Right.
That's not really a one-size-fits-all answer, but you want to have some credit utilization with a little bit of a balance showing that you charge and you pay down. So that shows you are a good credit risk because you pay down on your cards.
Pay down cards.
Yeah.
Taking a few notes.
Sarah, note to self.
I'm way under. I'm
them
like
down.
10 to 20% of
Oh,
my
then you're
limit, but I need to pay. They just
Oh,
are
but-
chilling there for a hot minute.
But, interest rates are so high right now. They're like 30% on these credit cards.
Oh, it's
Yeah,
loan shark.
It's
Vegas loan
insane.
shark.
I know.
Yeah.
And also, another myth, I'm glad you brought up myths because
Yeah.
we'll dispel the myths. Some people think, oh, I will move all my balances to this one card because then I'll just have to pay one card.
At a 0%.
And that'll be great at a 0%. The problem is the credit bureau sees one card with a $10,000 limit and a $10,000 balance, and that is not good for your score. So you're better off keeping multiple cards with low balances in relation to the limit versus one card being maxed out. And when you have a 0% interest, that's great, but we still have to hit you with a small payment for qualifying because that they will come a call in. You're going to have a payment soon, so at some point. So 0 interest, 0 payments a lot of times, but we still have to hit you with a payment.
Is the credit card the same as a line of credit as far as how they are looking at your credit score,
judged.
how they judge?
Yeah,
Exactly.
how they function and hit your score. They are, for the most part, like a line of credit on your home which is a revolving line of credit, like a credit card attached to your house, theoretically. So if it's maxed, it's not great for your score. But if the rest of your credit's all really good and you've got enough other credit and your mortgage, you're usually going to be okay.
Okay.
But it is still, it's not great to have anything maxed for your credit score. It will affect your score for sure.
Okay. I've had a line of credit out there and it's a zero balance.
Oh,
but
that
it's
won't
been
hurt you.
there for
That's fine.
15 years.
Oh, then
but
you
it's
definitely
still,
don't want to get rid of it. Yeah.
It's still open, but I
Right.
haven't touched it. So I was curious if they viewed that as like maybe I should be putting something on it every once in a while. Okay.
No, that's a little different than a card because you probably have enough credit on your other stuff that you're having a score, so you're okay.
Yeah.
And on that one, you should check into it because if you like the idea of having it, most lines of credit give you a 10-year draw period, and then at the end of 10 years, whatever the balance is, they give you a 20-year repayment period. So if you don't use it for 15 years, it could freeze or it may not be available. So if you want to have it available, you should check on it. And you should check what your rate is on it because you could very well refinance that and get a better deal depending on when you took it out. I don't remember what rates were 15 years ago, but it's probably it's probably
know if that's how
prime.
long I've
I'm
had
sure
it. I
it's
can't
prime plus something. There's some sort of a margin is how those function. So prime today, right now 7.5. We're getting ready to have a cut.
Yay.
We believe.
Good.
So it'll come down,
Knock
and
on
if
wood,
it
yeah.
is prime plus a margin, whatever that margin is, will just follow to the new prime rate. That's probably what it is. But you should look into it. Is what I'm saying.
Thank you. I appreciate that.
Yeah.
I have to get into this because I've never known this until you literally just sat down. I always thought a cash purchase was, let's say I'm buying a home for $100. I give you $100 and it's mine. Cash purchase, we're done, sign the note, signed, sealed, and delivered. You have a total different spin on that where you can come in as a mortgage broker, loan officer, explain that in layman's terms.
Yes.
So maybe I can follow
Because you've been
this.
working hard on a lot of cash.
I have. I'm really tired. That doesn't sound good though.
That's good. You're a busy woman, which is
Working
amazing.
hard for that cash.
She works hard for all the money.
Yeah.
Oh, yeah.
Okay, so that's a great tee up. The market is interesting, as we said, and a lot of people are nervous to list a home and sell because they don't know if they'll be able to find a home, right?
After the fact.
After the fact, and they don't want to be homeless, which makes sense, right? So we have a lot of people that would like to buy before they actually sell, but they don't have the cash to do it. All of their money is tied up in their home. So let's just say, somebody has a home with some equity in it, and once they sell it, they're going to have money for a down payment, and they'll go buy a home. But they would like to buy before they sell for various reasons. One, they found the perfect home, they're ready to go, but their house isn't even listed yet, but they want to make an offer. And they're afraid that if they wait to sell, that home will be gone. It probably will. Or sometimes they have dogs and kids and they work at home and they don't want to show their home. Or they're a single female. Maybe she doesn't feel comfortable having people in her home. Or a single male. I don't want to.
Yeah, don't let us out.
I know, could
we
be
get
either.
uncomfortable too.
Yeah, I know. Or elderly people a lot of times don't want to go through all that. They just want to move. And so lots of reasons why people would want to buy before they sell. So to do that, we have a few options. We have a cash purchase program that we use a lot. And the way that it works is we will purchase that home with cash for the buyer. They have to have 5% of their own funds. That's it. To get it going, to make this happen.
Okay.
So if they wanted to buy a house for, $800,000, they have to have $40,000, 5% down. We will advance 95% cash and buy the home cash for them in their name. They will move in. It'll be in their name. And we put a temporary, like a short-term lien, cash loan type lien on the home.
Okay.
Okay, so buy for $800, they put $40, we do $760 cash, advance the cash. They have a normal closing with title company. We don't really need an appraisal though for this, and we can close quickly with it. There's a fee to do it, and depending on the deal, it kind of varies. So won't get into that a lot. If anyone's interested, please reach out to me. I do a lot of these. This is a really cool program. So they move into the home, and then they list their home. Now their home sells. Let's say it took 60 days, 90 days, and they've netted out of their home an additional 300,000 or 250 or whatever, 150. And they want to put that toward the home they just purchased that we technically purchased with cash for them, but they own it. So they owe, we said 760 because they put 40 down.
Okay.
We did 760 cash, but they have a lien to us for 760.
Right.
Because they owe us that money.
Right.
So they can come with their proceeds from their sale, maybe 200. Now they only owe, if they have that 200, they only need a loan for 560.
Okay.
And that's where I do the normal 30-year, 20-year fixed mortgage for them. And we do a regular mortgage. They bring their 200 proceeds. We do the mortgage for 560, and now they have a regular mortgage on that house and go about their business. So it's a great program because they only have to have the 5%. A lot of people will have that available in their savings. They might borrow against their 401k and repay it in 60 days. Or we can do a home equity line of credit on their home to get out the 5%, or some money for 5% in moving. They move in, and then when the home sells, we do the regular mortgage. So it probably sounds complicated. It's not that complicated. Technically, we just advance cash for you. You move into the home. Once your home sells, we do the regular mortgage.
I don't think I ever knew this existed.
I've never even heard of that. Talk about some tricks that
I know,
they
and
have.
you and I have been in this world, which is super interesting.
Yeah.
Like being in the banking world, and I never knew that this
It really
existed.
became popular a couple of years ago when there were 30 people trying to buy the same house as you, and you hadn't even sold your home yet, and nobody would take a contingent offer. And we had to have solutions to help people buy cash quickly, no contingencies, because it is a cash offer.
Right.
We don't need an appraisal. We can close quickly. So it does put their offer to the top of the pile. And a lot of times, if it is a home where there's a competitive offer, which we are still seeing those, like I said, right home, right location, they can do the cash offer and it bumps their deal up, and they don't even have to offer over asking a lot of times. Because a lot of times a cash offer will trump a regular mortgage that has, even if it's a little bit higher price. It just depends on the seller. So that's a really cool program. We also have another variation of that where a lot of times a cash offer will trump. We do a mortgage that has.
Stop it. There we go.
And there's me. We also have another way to do this where, and I'm doing a couple of these right now. One just went under contract today, and we're going to do the mortgage on it. Okay, so they have a home to sell, and they have a ton of equity in their home. These borrowers I'm working with, they had like $400,000 in equity in their home. The house that they're buying, we can qualify. What we're going to do is we're going to do a normal mortgage. We're not going to do the cash purchase program. We're going to do a normal mortgage. But they don't qualify with both mortgages, their current mortgage and the new mortgage. They don't qualify with both. So we can write like a backup, it's called like a backup contract. And we buy their home. Well, we write a contract to buy their home with 180 days. It's a 180-day contract. And it's a reduced price. So it's a lot like a lot of these others, like, Open Door and Orchard and all these others you see, where we agree to buy the home at a reduced price, but we don't really want to buy the home. Now we would, and we can, and we will, but we're giving them 6 months to open market it with their normal listing agent and sell it for the price they really want. So in my scenario, their home will probably sell for 150, and they only owe like 100 and something on it. Their sale. But we're agreeing to buy it for like 415. So way below asking, but they could sell it for 415 and still make this other deal work because they only owe 100 and something on it.
Right.
Okay.
So we write a backup offer. We give them 6 months to get it sold. It's like the emergency escape clause or escape purchase. If they had to sell to us, they could. But because that we have a cash purchase offer written, and it's a cash purchase offer with no conditions, I can do their new purchase, and I don't have to hit them with this mortgage or the HELOC that I'm going to do over here to get their down payment money. So
Okay,
it's just
wow.
crazy math.
My brain's kind of getting.
Yeah, it's a lot like a Rubik's Cube.
No, I love this. I want to make sure if people are just joining, we have Michelle Oddo. If you are just joining, please go and rewatch, especially if you're looking to buy, because this is fascinating.
Yeah,
Like Josh and I
I
have
could do it in
written.
slow motion.
I know,
'cause,
I'm like,
yeah,
'cause
slow
we-
speed, because
I know, it's a lot.
It
I
is.
say
Yeah,
just call
no,
me.
but it's
Here's the deal.
right.
We got strategies. We got strategies.
we have
got
lots of amazing
We have so
strategies.
many options for you. It's like, I always say I like to be like a Swiss Army knife.
No, that's great.
Lots of options.
With the cash purchase, I have one
Yeah.
quick question over that.
Yeah.
So, and I saw one pop in, I think. So for that, you said there's a fee, and I know that depends on et cetera, but is there an interest? Is there a rate
Yeah, good
attached
question.
to that for 30 days, let's say? Because you all technically, or not so technically, kind of own it. You're fronting the cash.
Yeah. So we buy it, but they close in their name. They own it, and then we have a lien on the property. So we're just like a mortgage holder
Okay.
with the short-term lien.
Okay.
We are charging interest, and it's prime, and it's interest only, but they don't make a payment.
Okay.
It just accrues. So if it takes them 90 days to sell their home, whatever that interest payment would have been for, and it's interest only at prime for 90 days, every day that we own, that we have a lien on it, we have interest. So when we go to pay that loan off with our regular mortgage, we include in the payoff the per diem for the few months, 2 months, whatever, included in that payoff. But the beauty of it is they don't have to make a payment. They just keep paying on the house they exited until their home sells.
Okay.
So they just have the one payment. The interest accrues, then we pay off the short-term lien with the interest.
Okay.
So let me just say this. I've done a lot of these, and I mean, shout out to, the Simonsons. I've done it with Dave. We've done several of these with them, with our team. We've closed quite a few, actually. And I've with lots of realtors, but I just know that you guys are friends with them, so I'll give him a little shout out.
Thanks.
But we find, like I had a realtor that, I have a client, she's still a client of mine now, she's my CPA, but she had a home in Hilltop, I think they were in Hilltop, somewhere over there, I don't know, somewhere, Denver Metro, cool area, right? They had a home to sell, they had dogs, kids, and the home they wanted was like, one a year would pop up. That was it. And then when it came, it was gone. So it happened, she lost a couple. So one popped up, she's like, I gotta have this house. And I think it was like 2.4 million. I can't remember exactly. So her agent, who's an agent I've worked with for years, great realtor, Carla, called me and she said, we gotta do the cash purchase thing. They want the house, their house is even listed, whatever. What I'm getting at with this is, it was November. And she did not want to list her house in November, nor did she want to list it when she was in it. So the cost to do this for her, she ended up making it up because what happened was she moved into the new home. They cleaned the home, they staged the home, and they listed it in January when the market got crazy busy. So what she would have got for that home in November was not going to be it would have been okay.
Right.
But she was able to get a much higher price for that home in January when they were out of the home. It was staged and it was a much busier, just beginning to become early spring market.
Right.
So I think she got an extra like $50,000 more than I think they thought they were going to get, which far exceeded some of what the costs were.
This is I love that you are so creative. It makes a big difference for people. I mean, it's every scenario you can possibly think of too. And I know we talk with a lot of small to medium-sized business owners that run into the credit problem, that we don't have enough cash to put down because, I mean, the world is a little more expensive these days, and we have to be more creative just as business owners and people that are, how do we avoid debt and how do you go purchase a home when you don't always have, I've been thinking we need 15 to 20% down because that's what's been playing in my mind. And now you have a 5% option, which is incredibly amazing.
Yeah, you can do 5% down if it's your primary residence, all the way up to the max loan amount of $833,750. If you want to go over that and do a jumbo, you'll need more down, usually 10 to 20% depending on the program. But you definitely don't need 20% for those lower prices. And, another thing, we do a lot of down payment assistance for people who have a down payment, but they want to pay off debt. So they can take their money and pay off debt, and then we can do down payment assistance. So obviously you have to qualify. The income limits are really high anymore. We have several programs, but they're up at like 130, 150. Like you can make quite a bit of money and still qualify for these down payment assistance programs. And you do not have to be a first-time home buyer.
Really? Oh, wow.
Yeah.
Is your head exploding over
Yeah,
there?
a little bit. Just a tad.
It's like, oh my gosh, I need to be
So,
writing more
a lot of
notes.
people say,
This
well,
is
I don't know
awesome.
what to do. I don't know where to start. There's so many things. It's overwhelming. I'll do nothing. This is stressful. I'll just go shop.
It can be. Well, that's why you have an expert. It's like, would you, can I fix my toilet when it breaks? Maybe. Is it the best thing to do? No. It's good to have.
It's probably the best thing to do to fix a toilet.
Well, herself.
No, not myself.
Not her best choice.
I'm going to hire a plumber. I'm going to hire an
Yes.
electrician. Like, I don't know I don't know how to
Yes.
make up a loan. So
It's
you
like I
hire
can paint my
Michelle.
own house, but I'm not about to. It'll take me forever. It's not the best use of my time.
Right.
So you need an expert. So when people
Yes.
are like, I don't know what to do, and I have realtors say, Michelle, I've got this client, what, and a lot of times realtors, they want to kind of vet it all and talk. It's like, I need to talk to the client, have them call me, 5 to 10 minute conversation. And that quick, we can really figure out, this is what we want to do. This is what you're wanting to do. I've got strategies. We've got ideas. Let's get your info into my system. And then I can come back to you within, 48 hours, 24 hours, depending. And we will have some great plans for you. Mm-hmm. And I will help you put clarity to all of that, like, I'm not sure what to do, feeling. Because it's very hard to make decisions when you don't
know.
Don't have clarity. You don't know what it's going to look like. And then it just feels so out of reach that you panic and do nothing.
Right. Are there certain advantages where, you're sitting in a house, you want to sell it, but you find another one and it's great, and doing this whole, I guess, cash thing? Are there advantages of going with a cash offer?
Yeah.
What are those advantages?
So you mean as the seller, or
seller and buyer?
Yeah. Well, as a seller, cash offers are perceived to be stronger because there's not a loan in process something could go wrong, right? If they don't really qualify, if the loan officer didn't do a great job, if.
Right.
And a lot of times the appraisal's waived and all that. So it could be perceived to be stronger. However, sometimes they're not stronger because a buyer goes in with a cash offer and sometimes they're pickier and they pick apart the inspection and they say they're going to be easy to work with, but then they're not, and I see cash deals fall out on inspection and things like that, where another buyer might have a loan, but they're a strong buyer. The loan is they're well qualified and they love the home. Mm-hmm. And they're excited to get it, and they're willing to work with the seller through inspection and all those things. So it's not necessarily the strongest offer. As a buyer, because sellers perceive it to be stronger, if you can go in with a cash offer, you typically will trump other deals that have loans on them. So having a cash offer as a buyer many times will enable you to have a better chance of maybe getting your offer accepted over another offer. Because even though, to my point, it doesn't mean it really is always a stronger offer, people feel that it is. And sometimes they can close quicker and they don't need an appraisal and things like that.
A lot of times, right? It can usually close a couple weeks. 2-3 weeks. Right. Although we're closing mortgages in 2-3 weeks anymore too. So, because they're usually, like my clients, we have them fully pre-approved before they put an offer in. So I've already received all of their income and asset documentation, pay stubs, W-2s, bank statements, tax returns, underwritten the file. When they put their offer in and they get accepted, we're just updating things. We're not starting from scratch, So we can usually close pretty quickly, depending on the situation. But yeah, cash is king. Mm-hmm. Exactly.
I want to make sure we get into, because you just had a very heartfelt closing, I think, last week.
Yeah.
I definitely want to get into that. Before we jump into your amazing stories, is there anything else that you wanted to make sure we touched on, either on these programs?
No,
Or,
I mean,
okay.
you know me, Sarah. I could bore these people to tears with mortgage programs and underwriting and guidelines, and I love to talk about those things. But I think the stories are what people remember and care about. And those are the things that make what I do so rewarding, you know? Yeah. So I was telling you about, I had these clients that closed on Friday. I've had a lot of really great closings lately. And maybe just because they're the freshest in my mind. I have some really great ones coming up. So, you know, I have a closing last week that these clients are amazing. I just love these clients. They're really special. They had a home to sell in Parker, and the home was sitting because it got priced high for the market, and it wasn't really their fault. You know, it's hard because they were looking at other comps that were older, and their home was bigger, but their home maybe was more dated. You know, it's just they just didn't hit the bullseye. So then they were chasing the market, and so that was part of the problem. It took a while to sell their home. Okay. And they had to come down in price quite a bit to make it happen. And they wanted to get into Denver. You know, their son's a musician, and they want to be in the music scene, and they want to be close to, you know, botanic gardens and walkability and just like that cool, fun, totally different lifestyle. So finding the right home in their price point was also a challenge because it's a huge downsize, right? Because a home in Parker that you sell at maybe 800-ish, and a home you buy in the Denver area in the 800-ish is like a lot, like half the square footage.
It's like night and day. Yeah.
Night and day. It's a bungalow. It's cute. It's charming, but it's not, it's different, right?
Right.
So there were some challenges with that. But the thing that was so heartfelt for me was being able to rearrange people's debt. A lot of people think, well, gosh, I have a 3% interest rate. If I move, I'm going to have a 6.5% interest rate or whatever. And that is true. But what a lot of people don't look at is how we can realign and do some cool things. So we were able to pay off a bunch of things like, you know, cars and some debts and whatever, just different things that they were working on and do a smaller down payment, but keep their payments pretty similar, if not even better. And of course, mortgage debt's better debt. So we did a smaller down payment, paid off a ton of things, cars, this, that, and the other, and then kept their payments in a great place, but enabled them to get into the house they wanted and make their dream a reality. And their realtor was amazing, and it was just a journey. A lot of the challenges were just getting their home sold, finding the right house. We were able to make it all happen, close simultaneously on the same day, the sale and the purchase, and it was just really exciting, and I was super happy for them, and I just love this family. They're really neat people, and at the closing, we were just so happy, and yeah, it was just a great. There were tears. It was awesome. So I'm super happy for them, and I have another. Well, I have so many cool closings coming up.
This is what makes you who you are.
Yeah,
you know, it's not just a job, right?
Yeah,
I mean,
yeah.
it is, you are so invested in
Yeah.
the people and the family and the community.
Yeah.
And it makes a huge difference.
Yeah.
This is the biggest purchase that people will ever go through in their lives.
Yeah.
And have someone that's an expert, but that's someone that really cares.
Yeah.
And you do.
Yeah.
Completely. That's
Oh,
why
I care. And this is the
Yeah.
thing, like on this deal, the realtor was exactly like me. She and I are like, we don't give up. So every time there's a challenge, we're like, we're not giving up. We're not giving up. And even the poor borrowers, you know, they're like, we're exhausted. We just want to be done with this whole thing. Because the sale was the stressful part. Getting it ready, downsizing, getting rid of things, getting the price coming down, you know, trying to do your life, do your job, like finding homes you love and watching them sell. And it's stressful, you know. So this agent and I, she was great. And we just locked arms and we're like, nope, we're going to put our arms around these people. We're going to make this happen. So we did, and it was great. And I have goosebumps. Yeah, it was really cool.
Oh, and you have one coming up on Friday.
Yeah, so my closing on Friday is kind of similar.
Okay.
And actually, so Jimmy Hamilton came to me through a realtor, and this closing on Friday is that same realtor. It's her buyer's agent that works with her. So Anyway, she is, I believe it's the same agent. Anyway, this deal closing on Friday is also very special. This borrower came to me many months ago. It might even have been 6-8 months ago. I don't even know. Even longer, maybe. Who knows? But they had some challenges. He had owned a business, and there was some stuff that came out through that business. He doesn't own it anymore, but they needed some things popped up that he didn't even know were out there. So they had to take care of that so we could move forward. And as soon as he knew about it, he did. But it caused a delay. They also needed to sell before they could buy, and trying to time that stuff right. And it was a challenge getting their home sold. Same thing. Price had to come down, got it finally sold, found the house they loved, got under contract, doing the same thing, putting way less down, paying a ton of other things off so we can realign their debt and put them in a really great position. They're getting into a larger home, which they need for their family. And now it's closing on Friday. It's totally done. And I couldn't be happier. I'm so excited for these people. They are, the wife today, she's like, we could have never done this without you. And maybe they could, maybe they couldn't have. But I loved hearing that. I think I was a big part of it. And I really am just so excited for them. Yeah, it's really cool.
Well, I agree with her. I mean, it's the bonds that you make. It's the relationship that is very impactful.
Yeah. And we had to do a lot of strategizing on this loan to make it happen. There's a lot of behind the scenes things I won't go into, but we definitely did a lot of things that, and the husband's great, and just a lot of getting on the phone together and doing a Zoom together and over and over making sure that we were doing certain things that had to happen to make this happen. So.
No, of course.
See, I think that's the thing, is that's the touch. Even when I was in the financial world, I worked with loan officers and everything like that. And not once would they, I'll stop by your place, or we'll do a Zoom and then we'll kind of walk through all of this. It was pretty much, I'll email you what I need.
Yeah.
Send me what you need. And if you have any questions, email me back and stuff like that. It's that touch.
Yeah.
The high touch.
And we do, once that file is under contract and they're in process, we'll email and tell them what we need. But it's the additional, let's get on a phone call. Do you have questions about that? I'll get text. I just got this email, Michelle, I'm not sure. Let's get on the phone. Let's walk through it. Okay, can't get that. Let's get this instead. Maybe we don't need that. Let's try this. So just really, again, being creative and trying to help people. At the end of the day, really, I just want to relieve their stress if I can. I mean, it's a stressful thing. But I always say, people think getting a mortgage is like getting a root canal. And it kind of is. But, I give great anesthesia. So we try to make it very painless, or as painless as possible, and try to make it fun. And, yeah, just really, I think I understand what they're going through. That it's the empathy.
Right.
If you've got to have the empathy. And if you don't, you won't be good at this job.
Completely. I think that's across every industry, right?
Yeah.
I mean, IT stuff for me is so overwhelming that I'm like, just go figure it out.
Yeah.
Same thing with taxes or a lawyer. It's like, I don't understand. Can you please, layman's terms for me? And especially being creative in a very, I think most people are very unknown walking into this. And it's, how do I even start? What is step one?
Yeah.
And so to hire you that has the personal touch, I love that that's a part of your slogan and how you work your team, because it's so true.
Yeah.
I go back to the first time that I met you, and I knew that when you stood up there, you're like, here is how I have all of these different touch points, and I give them these little goodie bags, and then I check in a month later. How are you settling in your house? I'm like, oh my gosh, I want her in my life, because it's just like what Josh said. It's so much empathy, and when someone truly cares and that will support you. And I think, Josh and I, it's so amazing to me when we can be in an industry for more than a decade and not have known about this.
Yeah.
Because that's the type of people I think that we've unfortunately been in touch with, that it's like, send me what you need. It's very cut and dry.
I think there's a lot. I think there's a lot of institutions out there and everything that they put everybody in the same box. They put everybody in. This is exactly what each person is. Whereas, you don't take it like that. Everybody's different, and that's where that creativity comes in.
Yeah. So if if you're wondering, like, what makes her so crazy like that? So my dad was a mortgage broker. That's how I got into this business. I've told you this story before, Sarah. And when I was younger, I literally, from the time I was probably 3 up, my dad was so fun. He loved to debate, and he loved to have me sell things to him, like, sell me this pen, sell me this Matchbox car. So, well, why do you think that? Well, why would you do that? Well, he just loved that. He wanted to have a daughter who could think critically and be an advocate for herself and be able to get shit done. You know what I'm saying? So that was his thing, right? And so I love that he did that for me, because that's the fabric of who I am. And everything, his dad used to say, every problem has a solution. Every problem has a solution. And my entire life growing up, that was drilled into me. Every problem has a solution. So sometimes you feel stuck and you're like, there's no answer. But there's always an answer. But you have to stop, and your brain has to open up and think very creatively. And the only way to do that is to already know that every problem has a solution. You have to know that. And then your brain will find it. Sometimes in the middle of the night while I'm sleeping, but I will find it. It will think of something. So that is kind of the way. I've got a client right now. Oh, you remember John Keene, who is one of my realtors here. Yeah. He and I have a client together who has, who's a doll. This guy's great. But he has some IRS stuff he has to pay because it was from a divorce. It was, not his fault, whatever. But we're trying to figure out a way to get this deal done. And every time we come up with something, there was like a challenge. Well, today, and John told him, call Michelle. She's creative. She'll come up with a solution. So today we came up with a solution. We're so excited. Yay. And we're going to wrap it in. We're going to have the seller, because it appraised higher, so we can make the price a little bit higher and the seller can kick back because it's VA. Seller can pay debt. They're going to pay it, because we didn't even know about it till the title work came in, because it wasn't something he even knew. Anyway, it's a long story. He's a great, great borrower. Love this guy. So we're so excited because we came up with a solution. But there's always a solution.
That is a logo, and I say that almost daily.
Yeah,
almost.
So true.
There's always a solution.
Always.
It's to think outside of the box.
Yes.
And be creative when other people can't.
Yes.
And people will find you, I think, kind of organically when that happens.
Yeah.
I love doing that. I'm like, there is a different.
It's so fun.
It is so fun.
It's so fun.
It allows, like, if you asked me to draw a picture, there's no way I could do that. But I can think like you. It's
That's so cool.
To think, we have this problem, and this is how everyone else tried to solve it, and it didn't work. And there's a reason, because they were too scared or didn't know. Like this is blowing my mind that I can now go be like, hey, you can go buy something before you sell, and put 5% down, which I've never known in my many decades of being on planet Earth. And it's a way to to get what you want and have the same end goal. Yeah. And still be happy at the end of the day.
And the thing, too, is, like, when I have a client who we're providing solutions, I am not pushy at all. I'm actually the opposite. Like, sometimes I'm like, maybe this isn't a good time. Maybe this isn't the right thing to do. But I will always show the pros and cons. And, if you want to get there, we can do it, and this is what it looks like. Now, here's the advantages. Here's all the reasons why this is a great thing. Here's some cons. But if the pros are better than the cons, then let's go, But yeah, I really operate under that mindset. Like, there's always a solution. And anybody that works with me knows that, like my team, they know that I don't give up. And it's not because, yes, I'm competitive. That's probably part of it. But it's because I care about, I just want, I don't know why I'm that way. Probably because my dad drilled it into me from the time I'm little. I don't know.
You and I are I never knew this about you and I. We have a lot of similarity with that. I am super competitive. Yeah. And I really just want something, like, if someone has a goal, I'm like you. Like, let's find this together. Let's collaborate. And we or I am not always the solution. Totally okay. Let me help you and point you in the right direction.
Sometimes I'm not, and that's okay. And I do that too, for sure. And a lot of my realtors will tell you that. I had a realtor call me today. The loan wasn't with me. It had nothing to do with me. But she's like, Michelle, I have this problem. Da, da, da. And she has a listing, and somebody called, and they wanted the seller to hold a private loan and with a balloon, and she was like asking me all these questions. Of course I'll help you. Yeah, I don't have to do the loan. Like, of course I'll help you. But yeah, I mean, I just, excellence is really important to me. It's one of my core values. Like, I really believe in trying to be excellent and do my best job and
Right. Do the right thing.
Do the right thing.
Do the ethical thing.
That's right.
I love it. Oh, you were already like at the top of my list, and now you're like even like floating above the list. That's amazing.
I love it.
Oh,
Thank
see,
you.
Do you see why I was like, we have to partner with them? They're
Yeah. Yeah. I mean, it's been a while that you've been in here.
I know.
I love it.
And I know it's
Yes.
fun to have guests and that kind of thing, but sometimes, and I know if there's somebody out there that any of these things hit for you, or you have a different thing and I didn't talk about it, we probably have a solution.
For
So
sure.
call me or email me or text me or DM me, follow me on social, whatever. Because my goal is always to try to find the best way to help you get to where you want to go, and ultimately build wealth through real estate and leave a legacy for your family and for you to be in a better financial situation after you've spoken with me and we've done whatever we can do than before. That's it.
I love that you mentioned your socials, and
Yeah.
you are super active. Was that where you're?
Yeah, I was
go?
just going to bring that up. Exactly. Yeah.
You do like tutorials, and here's what to do if you run into this, and you're super active on social media, which is amazing. Thank you. From one business owner to another, thank you for doing that.
You and the Oddo group are all over, which is
And
great. Yeah.
I know you highlight your
try.
team, and you're
Thank
out
you.
there saying this is what's going on and all the different programs. So
And
that's
sometimes
yeah.
at the gym. It just depends what
I
I, feel
think
like
that's
showing. But like we want to be real people, and a lot of times, I'll align with a client because we have similar interests. But I want you to know, like, we are real people. We're not a big corporate company that doesn't have, a heart and a soul. And but yeah, we do a lot of social. We try to do a lot, and I actually really enjoy it. I know some people hate social media. It's like I love it, and I wish I had more time to be on it all the time. It's probably not that healthy, but I try to find the healthy stuff. Like if it's negative, I won't engage at all. I won't go there. It's not a place. It's not the place to do it. It's just not.
Agreed.
You're never. Someone was convinced to believe your idea because of social media. Never. Like that's not going to happen probably. When I talk about political or things like that, I'm just not. I don't go there. But regarding business, coaching, helping people with, solutions, like all that kind of stuff, I really try to do a lot of that. And I love social media because it's how I stay connected.
Yeah.
It's how I know that your son went to Elitch's and got to ride the big boy rides. And that was the
he
first thing I
did.
said to him when I saw him today,
Yeah,
right?
Yeah.
it's what-
How would I know that? Because I saw that on social. So I pay attention and I try to really engage and know that people's lives matter and I want to be a part of their life. I don't want to just do a mortgage. So yeah, we are friends with our clients for life, and we don't just post, but we try to engage and really be your cheerleader and shout out the cool things going on for you. And if it's not good, I want to know that too. Somebody recently, a friend of mine, she's an insurance agent, posted that she found out she had a terminal illness. Like she put it on social. It's like, wow, like the world is different. How can you tell 1,000 people in one stroke, right? Well, Facebook. So, she probably got 1 million DMs. I know she did for me. And it was like, if you need anything, I'm here. So that's what social is really cool for, like staying in contact, staying in touch. My high school trip we just did with all my not my high school trip, girls trip with high school friends. But that's how I'm in contact with these people in Florida. Many years later, I won't say how many decades, it's a lot, because we stay in contact on social.
Right.
So yeah, and I actually just closed a loan for one of those friends, and I have another friend who I'll be closing a loan for because again, I can lend in 50 states. So
That's so amazing. I just went to my high school reunion, and again, I won't tell the number, but it was, and we are now posting on social
Yes.
media because not everyone in my almost 1,000 kid high school class got to go.
where'd you graduate? California?
Cherry Creek.
Oh, Cherry Creek.
Yeah.
Yeah. So I grew up, so South Florida and the neighborhood I grew up in, my high school was Cooper City High School. And we also had a really large high school. Like our school was a lot like Cherry Creek in terms of size and just huge. But it's funny, we have our reunions and not everyone goes.
go.
Very small group goes at this point. But that group, we all stay in contact.
Oh, I love it.
Yeah, it's
well,
fun.
For those of you looking to buy, sell, questions about loans, real estate, the market, if you need someone to advise you who's an expert, please reach out to Michelle. If you want a warm hug, if you want someone to be empathetic over who you are, reach out to her. You're just such a beautiful person.
Oh, I feel the same way about you guys.
Well, reach out with any
dear.
questions, mainly to figure out why people stay in touch with the Oddo Group.
Yeah.
There's a reason behind it.
There's a reason.
So,
yeah.
Michelle, man, it's always wonderful to speak with you. Thank you for coming in. Welcome back. And I know you're leaving again here for a little bit, but hope you have a wonderful trip.
Thank you. I'm so excited.
Yeah. And for any and all questions, I mean, the phone number that we have been putting on the video, that is your direct phone number, and people can text this number.
Yeah, it's my cell. You can text me. I have a team, and once you're alone, once you become a real loan, you get, you'll have other numbers and people that will be helping you with the loan along with me.
Right.
But I am the tip of the spear, and I stay involved the whole way, and my clients text me all the time, and that is totally the way I like it.
Nice.
I wouldn't want it any other way. I enjoy that. That's how I keep the relationships. Yeah.
I don't think when I was in finance, there was one loan officer I worked with that openly gave their cell phone.
Yeah.
Out.
Oh gosh, I sure didn't. No. Oh, I was in your shoe. All full disclosure. No, this was 2007, 2008. People weren't getting my cell phone number.
Oh yeah. Exactly.
Yeah. It was a different time, for sure.
It was.
But even back then, I don't remember if I did or didn't, but we were always very hands-on with our clients and went through all that hard stuff.
Yeah.
And so, that's the goal, is to help people before they're in a rough spot. And we hope we never see that 2008 again. But the mortgage world is different, and the guidelines are different, and it's much more, we scrutinize much more, thoroughly, and the guidelines are much heavier, and I know that's a pain for some people. I had a client once go, "It feels like you're going through my underwear drawer." I'm like, I know, it's very invasive. I'm sorry, but it's not me. I don't care. It's the government. They make us do this stuff. And it's gotten looser since. That was right after '08. It got very, very intense.
Right.
But there's certain things we need to have, and it's not because it's fun for us either, but it's just part of the process.
To
So
paint the picture.
Yeah,
and so you can
exactly.
be creative with the information you're given.
yeah.
That's right.
Yes.
Well, thank you again, Michelle. Again, go to oddogroup.com. That's ODDO group.com, 303-961-6906. Call or text. And if you came in on the last part of this interview will be up on our social media platforms for a month, and on YouTube, and I believe LinkedIn forever on that. So thank you very much for tuning in. Thank you very much, Michelle. Absolutely love it.
Thanks, you guys. It's always fun.
Always. Stay tuned. Keep listening in. 7 p.m. to 8 p.m. every single day. You have 1 solid hour of only Colorado musicians in our rotation, but all genres, a melting pot every day, 7 p.m. to 8 p.m. And of course, 9 o'clock tonight, the Monday episode of Kind of Vague Radio, hosted by Andrew Talent and Rob Dixon. Happy Monday, everybody. Thank you for tuning in, and thank you for listening to K4CO Radio.